Greetings, everyone. This is Richard Krivo on January 28th, 2016, with today's trading video, which is entitled Sorting Out the Trends. Now, today's video is going to be a little different, as you might suspect, than the chart drill downs that we most often do. I've been getting a lot of emails over the last week or so about what's going on in the currency market. Well, I'm sure you've noticed the volatility in equities as it has been all over the financial news. I mean, plus 100 one day, minus 300 the next, plus 50, down 500 during the day, only to close at negative 200, that type of thing. I mean, these markets are all interconnected to a greater or lesser degree, and volatility and uncertainty certainly can transfer among them. And that's what's been going on largely. Now, also, for those of you who monitor my trending pip count tweets, you've noticed that all of last week's open positions were either closed out by me or stopped out. And some were profitable and some were not. And you've also likely noted that for the last few days, we've been flat with no open positions since we have not seen any compelling entry signals. Now, that being said, much of what a trader sees is simply a matter of perspective, depending on the time frame or time frames they are trading. Let me share this one cartoon with you here. I hope it comes through clearly. But the title of it is Perspective. Here's a gent on an island. Wow, is he excited to see a boat? And here's the guy in the boat. And boy, is he excited to see land. It's all a matter of what you're looking for and kind of, what you've been going through. And different traders are going to see these times that we're going through right now in different ways. Now, personally, being a longer term trader, I may have to wait a bit to see any signals that excite me based on longer term charts. Is what we are seeing now going to turn into an actual trend change or merely be a retracement? And in my opinion right now, based on the charts that I follow, too soon to tell on a lot of the currency pairs. Now, based on that, I'm going to sit on the sidelines. Cash is a position. Now, shorter term traders, on the other hand, they're going to be looking at lower time frame charts, and they're likely going to see setups that fit their strategy and will be taking trades. So before we take a look at a few of the charts, I just want to put our disclaimer up here for a second. Hang on, I'm going to bring that in. There we go. Just the usual high level of risk. May not be suitable for everyone. Only trade with risk capital, money that in fact you can afford to lose, because there will be losses, and the high degree of leverage for and against you. And this content is for informational and educational purposes only. Okay, hang on one second here while I bring up some charts. Now, this pound yen pair is an excellent example. And for those of you who are not familiar with how and why I set up my charts the way I do, you can refer back to a video that we did on YouTube, chart tutorial dated May 11th. And just for purposes here, weekly, daily, 4-hour, 1-hour chart. So the pound yen, if you've been following that pair at all, has been in an incredible downtrend. This is the weekly chart. I mean, from the time it started this downtrend, I mean, if we go back here to the last time it put in a high and go down to the lowest it traded, is about 3,100 pips. So significant amount. And again, we can look at a chart here and we can see that the pair has been putting in lower highs. Here it just came back up to that previous one. Lower highs and lower lows as it has been moving down in the weekly chart. And again, we can see here on the daily chart that the pair has been moving down. So in both the scenarios that we see here on the weekly and on the daily chart, pairs in a downtrend. Lower highs, lower lows. If you're looking at the Donchian channel strategy, which I have here on these charts, price action touched the upper channel and then took out the lower channel and then was, off to the races to the downside. And it's only been the last couple weeks that it's been moving back toward the upside, but it hasn't touched the upper channel yet. Far from it. Hasn't touched the upper channel yet on the daily chart, and it may not. However, this is where it gets interesting. When you look at the lower time frame charts, the 4-hour in this case and the 1-hour chart, and we're talking about lower highs, lower lows, what are we seeing here? We're seeing on the 4-hour chart where price action is making higher highs and higher lows, and it took out the upper Donchian channel. Same here. Touched the upper channel, took out the lower, and then touch the upper and continued to move higher, touch the lower, continue to move higher again. So we're seeing higher highs and higher lows on the lower time frame, lower highs and lower lows on the longer term time frames. So the charts are not in sync. And as a longer term trader, I want to see the charts in sync. And that might involve leaving some pips on the table that I, might get into some of these trades off shorter term charts, but I'm not a shorter term trader. So I'm happy, like I said a little bit in the intro, to sit on the sidelines. Cash is a position. And on this particular pair, I'm going to wait and see what happens because at this point, excuse me, at this point, all this could be, just looking at the daily chart, for example, is a retracement. And then the longer term trends could still kick back in and the pair moves down to the back to the downside, back in the direction of the longer term trends. I don't know yet. The more it moves higher, and I'm just using the daily chart, let's expand it here. For an example, the more the price moves higher on this and takes out more and more previous highs, previous levels of resistance, the more compelling it's going to be that this is going to be a trend change. But at this point, we don't know that. One way I like to look at it is, let's say from the top here to the bottom, 2,400 pips. Okay, right now, from where it touched bottom to where it is now, 600 pips, almost 700 pips. Okay, this 700 pip retracement, if you will, in my mind, does not negate 2,400 pips to the downside. So we're still waiting to see what happens. Let's put fib levels on this chart from the beginning of the trend to the bottom. Okay, what I like to see here is at least a retracement to between the 50 and the 618% retracement level. Not even close. I mean, it hasn't even reached, this is the, those numbers should be a little darker there, but anyway, this is the 38.2 retracement level. So it hasn't even come close on this daily chart yet to hitting that level and taking it out or potentially bouncing off of it and then moving to the downside. So for me, just based on this daily chart, I don't know what's going to happen yet. Is this going to continue? Maybe, but it'd be much more compelling to me to start looking for longer term trades based on the daily chart once that 38.2% or 382 level is taken out. The more it moves up, the more compelling it is, obviously, for it to be a trend change. But at this point, we don't know it. Another pair that I'd like to take a look at is, let's do the Aussie yen, because the yen pairs find themselves somewhat in a similar type of situation. Again, we have lower highs, lower lows, downtrend on the weekly, lower highs, lower lows, downtrend on the daily. But this one is a little more advanced to the upside. It's taken out some previous highs. Let's put a fib level on that, if we might, and just see. Here we are there. See now on this particular one, okay, it's traded above the 38.2% retracement level. And we still got slow stochastics here showing a strong potential, strong momentum to the upside. So this may continue. This to me would be a more compelling chart to go long against the longer term trends on the Aussie yen than it was on the pound yen. I'm still not particularly sold on this. I'm cautious. Those of you who follow me a bit know that. But again, we still here have higher highs and higher lows on the 4-hour where the upper Donchian channel has been taken out. And we also have higher highs and higher lows moving up on the 1-hour chart. So there's another example of a yen pair. And let's take a look at the Aussie USD. And again, we see a situation where we're looking at a downtrend on the longer term charts, downtrend on the longer term charts, confirmed uptrend on the shorter term charts. So you can jump into a trade if you so desire on those shorter term charts. But If those longer term trends kick back in, the ones we see on the daily and the weekly, then of course that's going to be a losing scenario for you. And we'll get into that a little bit more later in the video. Let's just take a quick look at fib levels on this pair too. We'll just start from this move and go. See, in this situation, we almost touched the 61.8 fib level, which is the highest level that I follow. There's a 786 level that is not on this particular chart, oftentimes known as the fib of no return. I mean, if something retraces beyond that level, oftentimes, more often than not, it's not going to go back in the direction of the trend, but we don't have that particular scenario existing on this chart yet. The last pair I want to look at for an example on this, and again, all of the currency pairs aren't in this type of a situation, but a lot are, especially the ones that were in really strong trends. Dollar CAD, if you were following that for a while, I mean, that was a race to the upside, no doubt about it. And it's still moving to the upside, obviously. We're looking at higher highs, higher lows. And on the weekly chart, it continues to take out that upper downtrend channel. We've had a big retracement here, still hasn't touched the lower channel on the daily chart. And potentially there might be still more room to move to the downside because we've got angle and separation on slow stochastics in that direction. But again, we've had this drop off and to the downside, and we've taken out the lower downtrend channel on the 4-hour, and we've taken out the lower downtrend channel for the first time clear back on January 21st. Well, not clear back, but several days ago based on the 1-hour chart anyway. So you can trade if you like off shorter term charts, but you're introducing more risk into the trade. Now, remember, if a longer term trader jumps in based on a trend seen on a shorter term chart, such as the 1-hour, the 4-hour on this dollar Canadian pair, they might get in at the very beginning of a move, and that's a wonderful thing. I mean, if this downtrend is going to continue and you got into it based on a 4-hour chart or a 1-hour chart, you're in for some serious pips. But remember, entering a trade where the longer term charts are not aligned with the shorter term charts is a riskier proposition. Now, if a more aggressive trader wants to do that, what they may consider doing is entering a riskier trade like that with a smaller position size than they normally would. And then, should the trade continue in their favor, you can always scale in more. You can always add more to the position. Conversely, if that longer term trend kicks back in and they're stopped out, the loss will not be as large. But one of my favorite sayings, which if you follow me on any kind of regular basis, you probably heard me say this: I'd rather be late and right than early and wrong. So I tend to err on the side of conservatism. So hopefully this helps sort things out a bit for you. And thanks for watching, and feel free to email me at RKrivoFX@gmail.com with any trading questions or questions on this particular video. Thanks a lot.